Thank you for attending today's webinar. We're covering fringe benefits tax. I'm going to run through a few things relating to fringe benefits tax. I do have a small agenda there, but before we get started, just a little bit about me. I've got over 20 years experience dealing with small business tax issues, including fringe benefits tax. I have two of our staff members, Anne Stiles and Brajesh Chowdhury, here with us. Don't know if their videos can be seen, but give us a wave, say hello, guys. Now, if you have any questions as we go, just add them to the Q&A. Bridge and Anne are here to answer questions as we're going through. Anything they can't answer easily on the chat, we'll get to at the end of the session. And for everyone that's registered, you'll get an email with a link to the recording, which will also be up on YouTube, which then raises the issue that if you are going to ask a question, just keep any identifying information out. No employers, no personal info, because it will be on the World Wide Web. So just today's agenda, why it's important, why we're talking about it today, bit of background on fringe benefits tax, the purpose, what fringe benefits, how they're taxed, common exemptions and concessions, impact on employees, crucially avoiding ATO audits, and a few things businesses can do today to minimise their exposure. So today it's important why we're talking about it. ATO believes there is $2 billion at least of unreported fringe benefits tax every single year. And their understanding of all the data is that it's driven from small businesses, not from larger entities. They believe the large businesses are doing the right thing and reporting and paying FBT. It's the small businesses that are failing. Now the ATO has mountains of data. I did read something not too long ago, 600 million pieces of data every year, and that was 5 years ago. The amount of data they get now will be staggering, which makes it very, very easy for them to match things up and target their audit targets. So the good old days, as one of my former bosses would have said, well and truly gone, because the ATO can just see so much stuff. We are finding the ATO is a lot less friendly to deal with when you aren't trying to comply with your obligations. You put your head in the sand, you deliberately ignore them. ATO is a lot harder to deal with, but if you show them you're trying to do the right thing, you're trying to comply, they will often do something to help you out. You might not get the exact outcome you're looking for, but it's at least a better outcome. And the risks of complying are higher today than ever before because of a combination of all of that. So a bit of background, the purpose of fringe benefits tax, introduced in 1986. Prior to that, non-cash benefits were effectively tax-free. Businesses worked out that they could structure up their employees' salaries as cars and other benefits, and nobody was actually paying tax on that. Predictably, it was getting rorted, so the government did something about it. The goal of fringe benefits tax is to tax the employer a similar amount to what the employees would pay if they got the cash instead of the fringe benefit. So if we think of a car as a fringe benefit, the employer will pay something similar to the amount of tax the employee would pay if they received the, whether it's a $15,000, $20,000 car allowance, how much tax would they pay on that? That's roughly how much fringe benefits tax the business would pay. Which leads into the obvious question, what exactly is a fringe benefit? At a simple definition, it is any non-cash benefit provided to an employee. I have also added their deemed employees because there are plenty of businesses out there that use contractors where there should be employees. Construction industry is rife with it. They will say to their apprentices and everybody else coming on, you need an ABN, I want to pay you as a contractor. For whatever reason, people think that gets them out of a lot of these obligations, but it doesn't. These people, if they are acting like an employee, they're a deemed employee and fringe benefits applies. Importantly, fringe benefits is more than a salary sacrifice arrangement. So just because you haven't gone to your employer and said, I want to salary sacrifice X amount to get this, doesn't mean you're not getting a fringe benefit. And some examples of fringe benefits there: cars, meals, entertainment, schools fees, Christmas parties, sporting events, you get invited to a corporate box or something like that, gym memberships, life insurance, car parking, strangely enough, any sort of use of business assets, so private use of business assets, getting accommodation, and the list goes on and on and on. I will cover off in a little more detail motor vehicles and also meals and entertainment. They are the two most common types of fringe benefits we see. Motor vehicles by far the most common one. And first off, there is a particular definition of a car that is pretty important. It's important for a couple of reasons. One reason is that cars get concessional treatment. They get to use what they call the statutory formula method, which often works out a lower fringe benefits tax amount to the normal method. But it only applies to cars, so that definition of a car is pretty important. Now, a car is a vehicle that is designed to carry a load of less than 1 tonne and fewer than 9 passengers. Now, that covers pretty much most passenger cars, covers small utes, although as I'll discuss in a second, small utes are also exempt. Many dual cab utes. Motorbikes are excluded from the definition of a car, but that covers most of the cars out there. Now, we've all heard that utes are tax-free. It's not entirely accurate, but essentially what's going on there is that there is this definition of what the ATO calls an eligible vehicle. I will refer to it as a commercial vehicle because I think that's more accurate. But a commercial vehicle, whether it's a car or not by definition, can be exempt from FBT. Now, a commercial vehicle is essentially a vehicle where it's not principally designed for carrying passengers. So you think of a single cab ute, even though it's got a carrying capacity less than 1 tonne, some of the smaller utes do, it's obviously not designed for carrying passengers, it's designed for carrying loads in the tray. So that would be an eligible vehicle or a commercial vehicle. Dual cab utes can qualify as a commercial vehicle. Depends on how much of the carrying capacity is dedicated to the tray versus dedicated to the normally 5 passengers in the cab. There's a formula behind it, which I won't go through. ATO has some information on that. We've got some information on that on our website as well. You can always give us a call or shoot us an email if you're unsure. Now, around commercial vehicles, they are exempt from FBT where they are pretty much solely used for work. Now, the ATO define that in a little more detail, and they say that total private use for the car must be less than 1,000 kilometres for the year. No individual private journey can be more than 200 kilometres, so that's no private journey, i.e. you can't take it for a drive to a holiday. And any diversion on a work to home trip or vice versa cannot be more than 2 kilometres. Now, most of the utes I know out there have more than 1,000 kilometres of private use. So technically, most of the utes out there should attract fringe benefits tax and FBT should be being paid. What happens in reality is very different. Not for me to judge, but just getting it out there that they are the rules. That is what the ATO expects. If you are ever unfortunate enough to get into an audit with the ATO, that is the criteria they are going to use. As I will discuss a little bit later on as things you can do to try and limit your exposure to audit and penalties with the ATO, having paperwork and having things to back up and suggest that your employees don't have private use of more than 1,000 kilometres, anything you can do around that will be helpful. Also exempt from FBT electric vehicles, so that is battery electric and hydrogen fuel cell. Plug-in hybrids were exempt, and that exemption ended on the 1st of April 2025. If you have had a plug-in hybrid before that date, you can continue using that car FBT free, but you just can't have a new one that is free. It will be under the normal definition of a car and treated normally. Electric vehicles are only exempt if their total cost is less than the luxury car limit for fuel efficient vehicles, which is around about $90,000. So you can't go and purchase a $250,000 Mercedes-Benz EV and expect to not pay fringe benefits tax on it. Within all these fringe benefits rules with motor vehicles, there is this concept of available for private use. If a car is not available for private use, no fringe benefits tax applies. However, most 99% of the time, a car is going to be available for private use. In the ATO's eyes, that should be read to say if it is possible for the employee to use it privately, not so much available for private use. The reason they say that is because some smart employers were trying to say, well, we've got a policy that says they can't, and therefore it's not available. ATO wise up to that pretty quick and say, no, look, if they take it home, if it's garaged at their house, if they've got the keys to it, it's possible that they take it privately, therefore we say it is available for private use. And I will touch on the statutory formula versus the logbook method when valuing the fringe benefit, because that is important. Statutory formula is pretty simple. It is 20% of the cost of the car, whereas the logbook method is the actual expenses of the car. That is really, really important, particularly if you're talking novated leases and things like that. If we think of a $50,000 car, 20% of that is $10,000. So if you have a car, a $50,000 passenger car, let's not exempt, we're paying fringe benefits tax on $10,000 per year. But if we do it via the logbook method, you think of a $50,000 car, the lease on that car, a 5-year lease, is going to be at least $10,000 on its own. You've then got fuel, you've got rego, you've got insurance, you've got repairs, tyres, all that sort of stuff on top of that. The true cost of that car could be $20,000 a year. The statutory formula effectively, in that case, halves the fringe benefits tax payable on that car. Now, if the car is used a high percent for business use, let's say you're a salesman, you're on the road a lot, logbook method might come out at 80-90% business use. That will actually give you a lower fringe benefits amount in that circumstance. So I generally find where business use comes out to be around 40% or more, that logbook method becomes a viable option. And employers, you should be mandating employees that they keep a logbook and keep track of all their expenses in that case. The other main fringe benefit I see, meals and entertainment. Now, it's really important to understand right from the get-go, under tax law, entertainment is not tax deductible, and there is a carve-out for unless FBT applies. So it doesn't matter whether that entertainment is provided to employees, to clients, to suppliers, doesn't matter who or where or what, it is not tax deductible unless you are paying fringe benefits tax. And that is one of the most widely misunderstood concepts in our tax law that I find. That raises the next key question, what exactly is entertainment? And you could probably use the euphemism, if it walks and talks like a duck, it probably is a duck. So the ATO, they have their 4 criteria there. The main one is why? Why are you providing that benefit? Are you providing it to entertain people? If so, it is going to be entertainment. I could use this webinar as a little bit of an example. Doing this webinar on this platform in this way, it's clearly not entertainment. If I was to do this in a function room in a hotel, provide you all with cocktails, have a band playing at the end, that's going to be entertainment. Even though the content is exactly the same, you're obviously being entertained by the cocktails and the band, and that is no doubt the purpose of why I would have it in the function room. ATO will also look at what, when and where. So what was provided, was it just the basics or was it an elaborate setup? You know, if we're talking food, was it just sandwiches or was it a 5-course meal? Was there alcohol involved? Was it during business hours or was it outside business hours? Was it on your business premises or was it outside your business premises? These are the things the ATO look at when trying to work out if something is entertainment, but I dare say most people would understand just by looking at something and going to something whether it is entertainment or not. Little dot point there, as I said before, entertaining clients. whether you are entertaining clients, suppliers, employees, prospects, doesn't matter. If it's entertainment, it is not deductible. Again, something widely misunderstood. See it all the time. People will take clients out for dinners. I've got a client that holds cocktail functions for dinners, and they just automatically expect, because that is a business expense, which it is, that it's tax deductible. Unfortunately, our tax law has a specific provision in it that says entertainment is not just tax deductible regardless of the purpose. But I will highlight here that meals that aren't entertainment are tax deductible. The really simple example of that, a lot of businesses will provide coffees, tea and coffee facilities to their employees. That is technically a fringe benefit, but it's not entertainment. You're not doing that to entertain them. You're doing that so they make sure they consume some water, have a little bit of caffeine, and stay productive. That extends out to light meals, sandwiches, things like that. But of course, as soon as you start getting into a 3-course dinner, as soon as alcohol's involved, then we're looking at entertainment, and the discussion changes a little bit. So now we understand a little bit more about what fringe benefits are. I'll go through how they are taxed. So first of all, fringe benefits tax year ends on 31st of March. So it's 1st of April to 31st of March. It is done that way because employers need to calculate fringe benefits, because if that is over a threshold, that is reportable on group certificates. So that gives employers a couple of months to work out their fringe benefits in preparation for their group certificates on 1 July. Now, if you are in the fringe benefits tax system, you will most likely get stung with quarterly installments similar to normal tax. So that's something to keep aware of. If you do lodge a fringe benefits tax return for the first time, expect to get quarterly installments shortly after. The effective tax rate of fringe benefits is 47% unless a concession or exemption applies, which means, as a general rule, fringe benefits tax is not tax effective. So unless there is a concession or exemption, you want to avoid fringe benefits tax wherever possible. I have an example very shortly, which will explain that in a bit more detail. Now, the employer is paying fringe benefits tax based on the pre-tax value of a benefit. So if we think of our car example before, $50,000 car, statutory formula, $10,000 benefit. The employer has to gross that up to work out what would somebody on the top tax rate earn in order to have $10,000 left to pay for that car. So it is essentially a backwards formula. You're starting at the end, you're starting at the net figure, and you've got to somehow get back to the gross figure in order to calculate the tax. So we've got an example here. Company employs Bob. Bob's salary package is $80,000 of wages, plus the company is generous enough to pay $5,000 of school fees for his kids, and they pay that direct to the school. That $5,000 school fees is a fringe benefit and attracts fringe benefits tax. So then the question is, how much tax would an employee on the top tax rate pay for them to have $5,000 after tax? The answer to that is $9,434. On that, 47% tax is $4,434. So the gross less the tax is the $5,000 net. And I've got a little shortcut formula there. It's essentially the net amount, the $5,000, divided by 100% minus 47% being the tax rate. So it's divided by 53%. So essentially on that $5,000 of school fees, the company will pay $4,434 of fringe benefits tax. And a little note there to say that less tax would be paid if the company paid Bob a wage of $9,434. Bob's tax rate is 32%, unless he's got a bunch of other investments out there. He's on the 32% bracket. Bob would only pay $3,019 of tax and would actually be $1,400 better off getting a wage instead of having the company pay the school fees. I will cover off some exemptions and concessions. So the first one's the what they call the otherwise deductible rule. If an employer is providing a fringe benefit or a benefit to an employee that if they would be able to claim a tax deduction for if they paid for it, then it is exempt from fringe benefits tax. So a common example would be training. If there was a training course and you sent your employees on that training course, that is a fringe benefit. But of course, if they were to pay for it and go themselves, assuming it's work related, they would be able to claim that as a tax deduction. And therefore, when you, the employer, pays for it, you don't have to pay fringe benefits tax. There is also a specific exemption for tools of trade, computers and other digital items where the use is mainly for business. Now the wording in there is mainly, not solely. It's okay if there is limited private use, but the purpose of giving it has to be for work. There is a threshold on digital equipment. I think it's 2 per year. It might be 3. So you can theoretically get a couple of computers per year, but can't go overboard on that. But tools of trade are generally okay. Now I mentioned before, commercial vehicles or eligible vehicles, as the ATO will refer to it, where private use is pretty close to nil, they are exempt from FBT. Passenger vehicles or cars, they have the statutory formula, which is a great way of saving fringe benefits tax. It also saves a lot of record keeping because you don't need the fuel receipts, you don't need a logbook, you don't need everything else associated with a car in order to correctly calculate your fringe benefit. Pooled vehicles are exempt. So pooled vehicles are ones used by many employees. So obviously in that case, if many people are using it, it's more than likely because of its work-related use. ATO just try and make it simple and say, well, a pooled vehicle is exempt. Most people would have heard of the $300 minor benefits exemption. And this is pretty widely misunderstood how this applies in practice. So yes, you provide, and I like to use a gift certificate or a gift voucher as a good example here. You give an employee a $299 gift voucher. It's under $300. Another part of the criteria is that it has to be infrequent. So let's say you do that infrequently, that's fine. It's exempt from FBT. The employee isn't paying tax on it because it's not a wage. But if you rely on the $300 minor benefits exemption, it is not tax deductible to the employer. So you go and buy the $299 gift voucher, you don't get to claim it as a tax deduction. Widely misunderstood. Very few businesses are actually aware that's how it works. And it's the same for GST. Where there's no tax deduction available, you also can't claim the GST on it. Now, we all know a nurse that is getting exempt fringe benefits. There are some employers, certain industries, that are either exempt or what they call rebatable. Exempt employers are essentially public benevolent charities registered with the ACNC and public hospitals. Rebatable employers, other charities, religious institutions and things like that. Now, an exempt employer can provide up to a threshold, which is $30,000 for charities, $17,000 for hospitals. So up to that threshold of fringe benefits with no fringe benefits tax payable. So we all know a nurse that is having part of their mortgage paid by their employer. That's what that is. They are getting $17,000 of mortgage payments paid for by the employer with no fringe benefits tax payable. These employers also get a $5,000 meal entertainment fringe benefit allowance. So they can have $5,000 worth of meals provided to them with no fringe benefits tax being payable. Important to consider, which is also something I touch on in the next slide, those exempt fringe benefits are still reportable on group certificates. So while they are exempt from income tax and fringe benefits tax, they are still on the group certificates and still count as income for many purposes. Now, rebatable employers, so they are the other charities that maybe aren't registered, religious institutions, things like that. They get those caps, but instead of the fringe benefits being exempt, they get a 47% rebate. So it's essentially close to a 50% discount. So if you are working for a public hospital or you're working for a charity, I would highly recommend going to your bosses and saying, hey, I've heard there's an FBT exemption. I can get some benefits tax-free. Can we look into that? Now, I just want to touch on the impact on employees at this point. So fringe benefits above $2,000, and that's a net value. So grossed up, it's around $3,900. Anything above that is reported on group certificates. Anything below that is not reported. So let's say you have a minor fringe benefit. Let's say you've attended you've gone to a corporate box that's been provided by your employer. That is technically a fringe benefit. Chances are it was valued less than $2,000. So while your employer is probably paying fringe benefits tax on it, it's not going on your group certificate, not being counted as income for some of these income tests. So as I said, income for income tests. So things like Medicare levy surcharge, private health insurance rebate, Centrelink, qualifying for Centrelink payments, age pensions, low income health cards, calculation of child support. All of these things include the reportable fringe benefit amount, even though it's not a taxable amount. So really important that if you're getting provided with a fringe benefit, you understand that it may have an impact on other things. I do want to touch on salary sacrifice arrangements and post-tax contributions. So we all know we can enter into a salary sacrifice arrangement, and in general, you will be asked to sacrifice not only the cost of the benefit, but also the fringe benefits tax that your employer is going to have to pay. So if we think of the $50,000 car, $10,000 benefit under the statutory formula method, employer will probably pay around $9,000 worth of fringe benefits tax on that. So they will ask you to compensate them $19,000. Now, what is possible here is having some of that contribution come out of post-tax contribution, so after-tax money, which then reduces the amount of fringe benefits tax payable. Now, probably the best way I can explain this is to use the school fees as an example. So we've got $5,000 of school fees. If the employee, let's say that was a salary sacrifice situation and not something provided on the accord of the employer. Let's say the employee went to the business and said, "Hey, I want to salary sacrifice $5,000 for school fees." The business goes, "Well, here's your options. You can salary sacrifice $9,400 from your pre-tax salary, or you can sacrifice $5,000 from your post-tax salary." $5,000 is because that is the value of the fringe benefit the employer is being taxed on. Now, some of you may have already worked out that if you are sacrificing $5,000 from post-tax income, that is pretty much exactly the same as paying the school fees directly yourself, which is entirely by design. However, when it comes to things like novated leases, they work because the taxable value of the fringe benefit on things like a car, where the statutory formula is involved, is often less than the actual value of the fringe benefit. So back to the car example, the statutory formula method would assess that $50,000 car as a $10,000 fringe benefit. However, the actual costs of running the car are going to be closer to 20. So if we go a salary sacrifice arrangement for that car, you would only have to sacrifice $10,000 from after-tax income, and the remainder, which would be $9,000 or $10,000, depending on the actual cost of the car, can come out of pre-tax income. And that's where your tax savings are on a novated lease or other salary sacrifice arrangement for cars. Because there is a concessional tax treatment for them, sometimes structuring it as a post-tax contribution can actually achieve a better outcome. We've got calculators to help assess that sort of stuff. So if it's something that interests you, come see us. If you're on here and you're not a client, go and see your accountant, have a chat about it. They will no doubt have access to a calculator. I did a video a while back about novated leases, which is on our YouTube channel, that goes through some of the precautions, I would say, that apply to novated leases. In short, don't believe everything a novated leasing company will tell you. because there are some traps in there that can see you actually worse off by entering into an arrangement through those companies. And one of the other impacts on employees, additional reporting obligations that you will be asked to do by your employer. So think if you're provided with a car, if there's high business use, they're going to want you to do a logbook. They're going to want you to keep track of your fuel. Hopefully they're giving you a fuel card for it. And all the other expenses you need to keep the invoices and receipts for, because for them to use the logbook method, they need to have that. So they're going to push that obligation down to you. There may be declarations at year end. You may have to declare that you've used your commercial vehicle less than 1,000 kilometres privately. If you're on accommodation, so living away from home allowances, for that to be FBT free, certain declarations have to be done. So there can be reporting obligations pushed onto you simply because if the employer doesn't have them, they've got to pay a larger amount of tax. So probably now getting into some of the more important stuff, avoiding ATO audits. That should be the goal of every single business. Don't care how big you are, you should be striving to avoid an ATO audit at all costs. So I'll just reiterate, there's $2 billion, give or take, out there of missed FBT. The ATO get mountains of data and they rarely do random audits. Now, if you're working at the ATO, you're in a decision-making capability, you are going to want to expend the least amount of resources in order to claw back as much of that $2 billion as possible. So I would call that the low-hanging fruit concept. They are going to attack the low-hanging fruit. So your job is to not be low-hanging fruit. Once the ATO attaches its claws to you, once they get you into an audit, I promise you they are not going to look at just your car or just your entertainment or whatever it is they're targeting. Once you get in an audit, it opens up all sorts of possibilities that they start looking at. So your goal here should be just to avoid the ATO attention completely. And on the next slide in a minute, we've got a couple of things you can do to avoid that. Before I get there though, there is a trap with doing nothing that almost nobody knows about. And it's got to do with the ATO's amendment periods. We are all aware that the ATO only have a certain amount of years to amend your tax return. For individual tax returns, that's probably 2 years, depending on how much income you got and what your circumstances are. For a lot of small businesses, it's 4 years. For some larger entities, it might be 5 or 7. But for a lot of people, it's around that 4-year mark. And FBT is no different. FBT is 4 years as well. However, that 4-year clock only starts when you lodge an FBT return. Most businesses out there are not lodging an FBT return, and therefore the ATO can go right back to 1986 when FBT started. There is no time limit if you are not lodging FBT returns. So, with that in mind, what every business should do if they are in any way providing fringe benefits to employees is lodge a fringe benefits tax return. I don't care if it's nil, I don't care if it's $1, doesn't matter what the value is, lodge it so you start that 4-year clock. You don't want the ATO starting an audit and going, hang on now, we want 10 years worth of records. If you don't have them, that allows them to make an assessment based on the information they have, and I can promise you it's not going to be in your favour. So focus on, first thing you should be doing is getting in touch with your accountant and saying, hey, we want to lodge a fringe benefits tax return. Just probably a word of warning there. If you go to your accountant, they have an obligation to lodge a correct fringe benefits tax return. Please don't go to them when you've got 5 cars that are being used by family members expecting them to lodge a nil. It just won't happen. They can't do it. Other things businesses should be doing, motor vehicle declarations, making sure logbooks are done for all vehicles. Now, I did say earlier around that 40% business use. I find some businesses get into a situation where business use slowly increases on a car, starts out at 10%, give or take, and they go, I don't need a logbook for that. I'll use a statutory formula method. Over a couple of years, it gets up a bit higher, creeps up to 50, 60%. No one has done a logbook because there's been no trigger for them to go, oh, I now need to do a logbook. Turn around to the FBT year and we go, well, I know your business, you've said your business use is 60%. Yes, that would give you a lower outcome, but you don't have a logbook. You can't use it. So we would recommend doing a logbook for all vehicles. It's a 12-week logbook. You can get apps on your phones that keep track of it all. It's not too difficult to do these days. But I would be saying to every employee you've got that's using a work car, please keep a logbook for 12 weeks. At the end of the year, particularly commercial vehicles, we want a declaration sign that says total use of the car privately is less than 1,000 kilometres, no individual trip more than 200 Ks, no detour more than 2 Ks. Look, between us and the World Wide Web, given this is going to go on YouTube, the ATO to prove you wrong in that situation is going to find it difficult. Having a declaration where your employee has signed it and you have signed it is a lot better than nobody having anything. So where possible, go and get those declarations done. Similar declarations should be made for other assets, just something that says there was no private use on this asset. You know, that could be the use of various, some businesses will have other vehicles involved, could be vans and things like that. So just some sort of no private use declaration where something's in use. And one thing that was actually a surprise to me when I found out about it, but one of the things the ATO will look at is whether the business has policies in place around the use of business assets, in particular around their private use. If the business policy is that there is no private use on business assets, that goes a long way towards the ATO accepting you when you tell them there was no private use. Now, obviously, it should go without saying, if there is private use and you're not enforcing the policy and the ATO see that, they are going to treat you as a liar and disregard everything you tell them. But that policy there is better than not having a policy. So there's a few simple things businesses can do that don't require a lot of work that can not only get you out of that low-hanging fruit category. Lodging a fringe benefits tax return will in its own stop you being low-hanging fruit. But then if the ATO do send you a letter and say, hey, you've got a car, can you tell us about it? You can go, yep, here's a logbook. Here's my calculation of the fringe benefits. Hey, we've got a dual cab ute out there. We've done the calculation. It's a commercial vehicle. We've got a no private use declaration by the employee. That's probably going to be enough for the ATO to say, no problems. We're going to go focus on somebody else. So that is my presentation. Thank you for sitting with me for 40 minutes while I go through that. Now I will open it up to any questions. I don't know if we've had any questions come through on the Q&A. If anyone does have any questions, throw them in the little Q&A box. You should have a little button or link to the Q&A section. So if you have any questions, now is a perfect time to ask them and we will do our best to give you a straight answer straight away. Got none coming through yet, but I will give everyone a couple of minutes just in case some come through. Our phones, our emails are always open. You can always send us a question via email. Give us a phone call if you're unsure. If you are one of our clients, you would have received an email recently with some info about fringe benefits tax. You'll probably receive another one shortly after 1st of April. We will try and hammer home the point to our clients that, hey, fringe benefits is a target of the ATO. Let's get something lodged. So if you're one of our clients, you'll probably get a couple of prompts from us. Don't be afraid to talk to us about it. Please don't be one of the businesses that sticks your head in the sand and ignores it and pretends it's not a problem, because chances are the ATO will find you at some point. Got no questions come through, which makes my job a lot easier. So for everyone that has attended, unless I see a question comes through in the next half a minute or something, just a quick thank you all for attending. Thank you for giving up part of your busy day. Very much appreciated. We have some videos on our YouTube channel. I've got a few there that have more details around specific fringe benefits. There's one on cars, one on entertainment. There's a couple of others in there. And so by all means, go to our YouTube channel. I probably should have put a link up there on the slide. I haven't got to that. but just jump on our website. There's a link on our website so you can see some of those videos on there. And yeah, thank you very much for attending, and any questions, reach out.